Today we are going to be discussing current events within the finance sector for the week of February 27th to March 2nd. This is our agenda for the presentation. There has been some recent news regarding equity, convertible, and debt financing. Yelp had its IPO on March 1st, selling 7.15 million shares at $15. The stock had a huge increase in price the following day to increase its value 64%. And closed at $24.58. Yelp stock increases created a lot of optimism towards Facebook's future IPO. There was also Home Loan Servicing Solutions, which launched its IPO on February 28th, selling roughly 13.3 million shares at $14. The stock closed at $13.75 at the end of the week. In terms of debt financing, there was Polaris Minerals Corporation, which just completed its debt refinancing, which was announced in January. It has issued $15 million in senior secured notes that mature December 31st, 2006. There was also Bainro Corporation, which is a mining company, that closed a $175 million debt financing deal, which will be used to fund the opening of a second gold mine. Then in some of the most recent announced M&A events, which are listed in this chart, some have no details disclosed, so I will go over the most notable. There's Wells Fargo, which has announced it will be acquiring BNP Paribas, a North America reserve-based and associated diversified energy lending business, in an all-cash deal. The deal, subject to regulatory approval, is expected to close in the second quarter of 2012. Then there's Linn Energy, LLC, which is set to acquire Yucatan Basin properties from BP America Production Company for roughly $1.2 billion. This deal is expected to close on or before March 30th. Linn Energy will finance the deal with proceeds from borrowings under its revolving credit facility. And then this is a list of recently closed deals. Again, I will go over the most notable. There's Svenska Cellulosa, which is buying Ever Beauty Corp., a disposable diaper manufacturer, for roughly US $290 million. Then there's Vocus Inc., which acquired iContact, an email and social media marketing company, for $169 million. The deal was funded by paying $91 million in cash, $9 million in common stock, and $69 million in redeemable convertible preferred stock.
The economic conditions of the United States have somewhat improved since the recent recession. This improvement can be observed by looking at the recent commercial property sales and the unemployment rate in the U.S. During the recession in 2008, the commercial property sales dropped to about $146 billion, compared to $514 in the prior year, and hit its lowest during 2007 to about $55 billion. Now it is steadily increasing. As we can see currently in 2012, there has been about $250 billion worth of commercial property sales. Unemployment in the U.S. rose to about 10% in October 2009 from 4.4% in May 2007. Now it is steadily decreasing since it was 8.6% in November 2011 compared to Greece's 18% and Spain's 22.5%. This and projected to be 7.8% in July 2012. The initial job claims that measure emerging unemployment rate are also decreasing. In Europe, however, Greece's credit rating was cut to lowest level by Moody's Investors Service after the country began the biggest sovereign debt restructuring ever. Spain announced on March 2nd that a deepening recession meant that it would have to abandon its deficit reduction targets for this year, and a European summit meeting that had looked to be surprisingly routine after 2 years of crisis, ended with another test for the credibility of the Eurozone. The most recent tax and regulatory developments that impact the securities markets would be the changes made to cost-basis accounting and the readily tradable employer securities. Beginning in tax year 2012, the IRS requires mutual fund companies and brokers to report on Form 1099-B the cost basis of sales for covered mutual fund shares purchased on or after January 1st, 2012. We will still be required to calculate and report the gains and losses realized on sales of non-covered shares acquired prior to January 1st, 2012. Money market funds and tax-deferred accounts such as IRAs 529 accounts, and other retirement plans generally are not impacted by these changes. For covered and non-covered share redemptions, if we sell or exchange shares after January 1st, 2012, non-covered shares will be redeemed from our account before covered shares for any cost basis calculation methods except specific identification. The readily tradable employer securities are for purposes of meeting the stated code's diversification requirements for defined benefit contribution plans, generally effective for plan years beginning on or after January 1st, 2012. Employer securities that are readily tradable on an established securities market and readily tradable on an established market mean employer securities that are readily tradable on an established securities market under the stated regulation.
Goldman Sachs was in the financial news quite a bit this week. It was announced on March 1st that they are going to acquire Ariel Holdings Limited insurance and reinsurance operations in an effort to boost their current property and casualty operations. The deal is anticipated to close in April for an amount which remains to be undisclosed at this time. Goldman Sachs continue to be in the news along with JP Morgan and Wells Fargo. Regulatory filings issued February 28th indicate that they all may soon face civil suits filed by the SEC for poor disclosure of risks of subprime mortgage bonds. This isn't Goldman Sachs' first dance in the litigation arena with the SEC. They were fined in July of 2010 $550 million by the SEC because one of their prominent hedge fund managers had improperly disclosed bets against mortgage-backed securities when the bonds were sold. And finally, on February 28th, Morgan Stanley announced that it will sponsor and host the A Billion Plus Change campaign in New York City, which will include over 78 companies who have pledged $1.6 billion in services to nonprofits all over the country. For the past 3 years, they have educated these nonprofit organizations as part of their pro bono program. Their goal is to teach the skills and models necessary for sustainability in the present and enduring success in the future. The A Billion Plus Change campaign is simply an extension of what they have already been committed to do. On Leap Day last week, UBS announced the launch of an algorithmic trading strategy after 4 months of beta testing. It is designed to aid current and potential clients with illiquid, hard-to-move securities such as U.S. small-cap stocks and Canadian equities. They have named it UBS Swoop because it waits, watches, and acts on those uncertain times when there are bursts of liquidity in the market, such as the time when the desired trade price and listed size have become available. Basically, this algorithm can search out those times when these otherwise difficult-to-trade securities can fetch the highest dollar. And February 29th, JP Morgan announced a new fund reporting and media exchange site, calling it Frames. This site provides real-time access for mutual fund administration regulatory service clients to a secure work environment. It offers a document sharing, uploading and downloading ability, online access, and data archiving for board books and records. It is also a database for proprietary research, online tools, links to industry groups, and regulators and vendors. It will be accessible through JP Morgan's Access, which is a web-based application for compliance and portfolio management. It will initially only be available in the United States.
All right, in global market news, despite a drop in Italy's borrowing costs Monday, the Eurozone debt crisis remained at the forefront of investors' minds with no guarantee that a new bailout package in Greece would succeed. Eurozone banks and European Union leaders met Thursday to balance between budget austerity and reviving lost growth by focusing on structural economic reform and ways to combat unemployment. Japan's Nikkei average hit a fresh 7-month high, and the European share market ended flat on Friday after European Central Bank liquidity operations and injection of cheap money this week unpinned market sentiment. In commodity news, spot gold started out the week Monday edging down 0.2%, but made a slight turnaround on Tuesday, moving upward again towards the resistance level of $1,800 an ounce. Bernanke speech Wednesday, though, spiked sell-offs in the market, wiping out gains to result in a 5% decline to as low as $1,687.99. Thursday brought a rise again of 1.5, but gave back 3.3% of that Friday, ending the week down 3.5%. And silver began the week reaching a 5-month high, rising 4.1%, breaking through resistance level, reaching $37.21 an ounce. As with gold, though, sell-offs on Wednesday from the Bernanke speech affected the price, creating a drop in value to end the week down 2%. As for oil, it started off the week up 1.2%, but quickly turned on Monday. That carried down through Tuesday, declined 2%, its sharpest one-day decline in 2.5 months. Thursday's prices surged up, though, nearly 5% to over $128 a barrel after reports of an Iran pipeline fire. This was the highest price per barrel since 2008. On Friday, though, fears of the pipeline fire eased to end the week down 2.8%, snapping 3-week string of gains in oil prices. In Forex news, Euro slides into its worst week this year, with the euro falling to 1.32 and was on course for a weekly loss of nearly 2%. Japanese yen declined to $81.78 as it slid to a 9-month low versus the dollar, which according to Reuters is the lowest level of the yen since May. The British pound fell to 1.5828 after a midweek gain of 0.75%, ending the week nearly flat, down 0.2%. And the Canadian dollar ended a 4-day run of gains, but still ended the week up with a 1% at $1.011. In leveraged buyout news, Inuvo Inc., an online marketing company, and Vituro Inc., an online advertising company, announced the closing of their merger effective March 1, 2012, after receiving approval of the stockholders of each company on February 29, 2012. Vituro is now a wholly owned subsidiary of Inuvo in a tax-free exchange of shares at the exchange ratio 1.546 shares of Inuvo common stock for each share of Vituro common stock. On March 2, 2012, Inuvo stock rose 20.46% in trading the day after this announcement. Also, Apollo Global Management struck a deal to acquire El Paso Corp's oil and gas exploration and production business for about $7.15 billion, in what could be the largest leveraged buyout deal of the year so far. The Apollo deal is contingent on the completion of the prior Kinder Morgan El Paso deal from late last year for $21 billion. Kinder Morgan only interest is El Paso's pipeline assets and put the E&P business back on the block, hoping to use proceeds from the sale of Apollo to reduce the cost of the original deal. And that concludes our presentation.